Hello and welcome. Today, we're going to follow the money. We're unpacking the powerful forces that are driving some absolutely massive shifts in China's stock markets right now. You know, the key is to know China to do better business. You can save a ton of time and money with expert insights on China trade and investment. So welcome to our channel, Trade with China. Today, we're diving deep into the huge capital flows shaping both the Hong Kong and mainland A-share markets. We're going to see who's investing, and more importantly, where all that money is really going. So, why are we talking about this right now? Well, it all comes down to this one number, 2x. The average daily trading volume on the Hong Kong stock market has nearly doubled this year. We're talking an explosion from about 132 billion Hong Kong dollars to nearly 260 billion. That is a huge surge in activity, and you've got to ask, what's behind it? Right, so this incredible burst of energy has really pushed Hong Kong's market right to the front of the global pack. And that's exactly why we need to dig in and understand the forces driving this momentum. And what's really fascinating is how this performance stacks up on the world stage. I mean, Hong Kong's growth isn't just strong in a vacuum. It's significantly outpacing both mainland China's A-shares and even the super strong US markets so far this year. This really isn't just a ripple, it's a wave. So what's fueling this fire? Well, the first and most powerful driver is an absolute record-breaking flood of capital pouring in from mainland China. And when I say a flood, I mean it. We are talking about 1.26 trillion Hong Kong dollars. That is a colossal amount of money that has flowed south from the mainland into Hong Kong's market just this year alone. It's a brand new all-time high, and it is fundamentally reshaping the entire landscape. Now, you'll hear the term Southbound capital a lot. So what does that actually mean? Well, it's pretty simple. It's money flowing through the Stock Connect program. Think of it as a trading bridge that lets qualified investors on the mainland directly buy and sell certain stocks listed in Hong Kong. But here's where the story gets really interesting. The type of investors sending this money has completely changed. In the first half of the year, it was mostly the big players, large insurance funds. But since the third quarter, it's been a dramatic plot twist. The main drivers are now individual retail investors, everyday savers, pouring their money into the market through ETFs. Okay, so that covers the huge domestic tide of money, but what about the other major group, the global investment community? Well, their story is a lot more complicated. It's really a tale of two completely different mindsets. At first glance, things look pretty good. Overall foreign investment is definitely improving, but if you dig just a little bit deeper, you find this major split. Passive funds, the ones that just track indexes, are flowing in. But the active global managers, the people paid to make big strategic bets, they are not on the same page at all. And this is that crucial division right here. On one side, you have funds based in the Asia-Pacific region. They're jumping back in, increasing their China investments to normal levels. But on the other side, funds in the US and Europe are doing the exact opposite. They're staying super cautious and even reducing their exposure. And we can actually put a number on that caution. Active funds that focus on emerging markets are, on average, underweight on China by more than 2 percentage points. Now, that might not sound like a lot, but in the fund management world, that is a huge strategic call to hold less Chinese stock than the benchmark says you should. And it doesn't stop there. The trend is even stronger for global funds that exclude the US. Get this, their underweight position is even deeper, at about 2.6 percentage points. This data just screams widespread hesitation from Western capital managers. So, all of this leads to the million-dollar question, right? With these clear split, for the foreign investors who are putting their money to work in China, where is that smart money actually going? What bets are they making? To find the answer, we can peek at the playbook being used in the mainland A-share market. By seeing what these sharp foreign investors are buying, we get a really clear picture of their strategy. And here are the top targets. Foreign capital is flocking to three giants. Number one is KLTL, the undisputed global leader in EV batteries. Number two, Quicho Mutai, the famous premium liquor maker. And number three, Medea Group, a massive global player in home appliances. See the theme? Each one is a dominant leader in its industry. And if you zoom out from just the top three, a really clear pattern emerges. Foreign money is overwhelmingly choosing three types of companies. Those dominant industry leaders we just saw, huge and stable banks, and major state-owned enterprises. The strategy is obvious. They want quality, they want stability, and they want scale. Okay, so we've followed all these different streams of money. Let's pull it all together now and talk about what this actually means for you and your strategy. Let's get to the actionable insights. All right, here are the 3 big takeaways. First, the mainland retail investor is now a powerhouse in the Hong Kong market. You absolutely have to watch their sentiment. Second, global investors are totally split. So if you're looking for a leading indicator, keep an eye on Asia-Pacific funds. They seem to be moving first. And third, the smart money playbook from abroad is all about playing it safe, picking stable, large-cap industry champions. Ultimately, it really just boils down to this. The key to success is being able to tell the difference between the powerful, all-in domestic tide of capital and the much more picky and cautious global currents. They're 2 completely different stories about the market. This channel will bring you practical knowledge to navigate business, investment, culture, economic trends, and communication tips in trades with China. Your comments really encourage us to realize our video value and update more useful information. Please press like and subscribe now for actionable insights and win-win solutions. Don't miss the possibility to understand and make money in trades with China.